Happy Monday, traders. So on Friday in the US, we still had some important economic data that came out, and that was US monthly retail sales. Market was expecting that to come out month on month, slightly positive at around about 0.2%. But we got quite a decent miss on the downside. It actually came out negative. It came out negative 0.6%. So if we combine the economic data of last week, the softer retail sales, the softer CPI and PPI numbers, it reaffirmed traders' bets of like reducing the probability of a Fed rate hike when they next meet in September. So that was one of the key takeaways from last week, is that previously we saw the probability of a Fed rate hike in September as much as 70%. Just after the last FOMC, and now on Friday we've got that down towards only a 30% probability. So traders are pricing out the Fed is going to cut in September. And so yes, obviously equity markets, that's been a positive for them. So yes, US equities did have a very good week last week. S&P making new record highs and closing very close to them. NASDAQ back above 30,000, pushing back up towards record highs. But we actually had the Russell Index, the small caps, actually did make a new record high on Friday. So we've said this quite a few times, but US equities certainly are, the strong link in markets. So not too sure exactly when this is going to end, but certainly it has not paid fading US equities. Okay, so on the weekend, we didn't have any escalation in the Middle East crisis, but we certainly did get some worrying headlines from Iran. Firstly, they came out and said that they are prepared to keep the Strait of Hormuz closed all the way until the November midterm US elections for Trump. And then also keep it closed until the Strategic Petroleum Reserve, the SPR, runs dry. So look, certainly the Iranians, they want to damage Trump not only politically, but also economically with higher crude prices. And they also did come out saying something worrying, that it seems as if they think that potentially there might be some sort of ground assault or invasion. And they've come out with a bounty that any Iranian that kills or captures a US soldier would get 30,000 USD. So look, the Iranians certainly are digging in. Forget about any negotiations or anything like that, or diplomacy. And this this conflict certainly seems as if at some stage it's going to look like it's going to escalate militarily. So look, crude prices, yes, they did end the week positive, above $82. We've reopened pretty much flat at those levels, but it's very hard not to, bias of being long crude, because at some stage it looks as if we probably are going to go back up towards $100, and depending on the escalation, maybe well above $100. So your bias, crude is volatile. So when you do get the opportunity of retracement or some sort of dip, certainly I think the better strategy is getting long into those retracements. At the moment, no doubt, there's probably good buyers around the $80 level, and topside in the short term around the 85, 86 is where we've got some resistance and technical resistance. But certainly, if we do break above that $85 area, I think that it's going to open up a run for $90. So again, bias definitely is probably long crude. Moving along in the currency markets, really haven't seen any sort of big moves there, but we are seeing dollar selling, and obviously on the back of traders paring back their Fed rate hike bets. So, and that softer data obviously last week. So DXY at the moment is trading below 100. It's down around that 99.60, 50 area, and sitting right on some support around that 99.40 area. So If for whatever reason we did see that break, and it's certainly that support is close, we'll probably maybe see a bit more momentum selling and a directional move for the USD. So let's see. Precious metals, they did have a positive week last week, but nowhere near the gains that they did have from the previous week. Gold certainly saw some great resistance above 4,400, around that 4,450 level where we saw a sharp sell-off and a bearish key reversal day. So look, yes, I think it's pretty obvious the resistance for gold is above 4,400, 4,450 up to 4,500. So the gold bulls really need to get through there before potentially we can see some more momentum, next leg higher for gold. And the same as silver. It had some very good resistance at $67 where it was smashed lower. Needs to get above that. I think if we get above 67 at some stage, could make a run again for $70. But no doubt for precious metals, I mean, look, the buyers certainly have been in control the last couple of weeks, and bias there is probably getting long in dips as well. Just like crude oil, precious metals are certainly volatile. You do get opportunities. And finally, for the crypto bros, Bitcoin, it's the weak link in markets, really struggling. Finding it super hard to rally. At the moment, we're trading around 63,000, up towards 64, 65, very stiff resistance. Certainly has lost its correlation with US equities and the NASDAQ, even though that's gone higher, it has not helped at all with Bitcoin. And if for whatever reason we did see risk roll over, I think that that 60,000 support would get tested and potentially break. So yes, at the moment, weak link certainly is Bitcoin. But in any case, look, to start the week, it is pretty much a quiet open. Most of the markets have opened at levels that we saw on the close on Friday. But as usual, the things to watch out for is crude. Obviously, crude spiking up is a negative for markets. So any sort of headlines out of the Middle East certainly is something to watch out for. Anyway, good luck with your trades, and we'll check back in with you shortly.